Another bullish day for the SPY, everybody. I mentioned yesterday that every time SPY, the last few times that SPY has dropped down to the 50-day moving average, that's this orange line right here, as you can see here, here, and here, SPY has made a big move up to the upside, a nice, beautiful recovery. So once again, that has happened. Dropped here, faked everybody out. Oh, you see this white line, had support there, faked everybody out, took out everybody's stop loss. Our area of liquidity, like I always mention, boom, filled the gap. This long wick, that was actually a gap, and SPY filled it out today. Got back above the 20-day moving average, okay? So the fact that it closed below the 20-day moving average on this day, it was only one day. It was not enough to tell us that the bear trend was going to continue. Very next day, it went back above the 20-day, but still, that's only one day, right? So here's our second day, and not only on our second day that it closed above the 20-day, it came back to retest it, gave us a very bullish bounce, and closed well above all of our moving average. That's the 5-day, 13-day right there. Okay? Like I said, guys, we buy the what? We buy the dip, not the tip. This is why we buy the dips in the bull market. This is why we stay bulls in the bull market. Okay? So yes, we got this area of unbalance here, but it doesn't mean it has to fill it right away. Make no mistake, imbalances 8 out of 10 times usually get filled, which I will show you some example in a little bit, okay? But it doesn't mean it has to fill right away. We have to think, what are the market makers' main goal right now, okay? So we got this area of liquidity, this green area. As you can see, this resistant line, I made it green, and I made it a little bigger to give us this area of where retail traders who are looking to short it at resistance, where they would possibly set their stop losses. So in this green area is a pool of money. Then we also have this double top right here where market makers also left an area of liquidity, this purple area. So there's a lot of money up here that I doubt the market makers are just going to leave. Okay, they want to claim their money before possibly a nice correction to the downside. Okay, now, like I said, this is only one day above all of our moving averages. Okay, so I like to see the SPY stay above all of our moving averages, because if it comes back down, there is a chance that this could have been an A, B, C wave to the downside. And I think, and if it does come down, it'll most likely fill our imbalance over here and then possibly bounce back up. Okay, so it's okay. Pullbacks are healthy, okay, and it's usually done in A, B, C wave, but it doesn't mean it has to happen now. Okay, for all we know, just like here and just like here and here, we got another. It was just a regular pullback. Okay, now we take a look at the VIX. The VIX, like I've said many times, inverses the SPY. Now, if the VIX stayed above the 200-day moving average or stayed above our resistance line here, I'd be very worried. Okay. However, we're seeing signs right before our eyes that the VIX is coming down. It went up, that couldn't hold above resistance. It did close above the 200-day, which was a little bit concerning, but now it closed the next day, and today it had this gap and it filled the gap. Now it's trading below the 50-day moving average. So this is looking good. Now I do have this support line for VIX. So if VIX start breaking down this support line and not heading back up, because it could falsely come down, you know, trick us and then head back up. And if it heads back up, that means SPY is heading down. So if I see VIX continuing to head down, like it's done so in the past, we had a big move and it just come right back down, you know, big move and it just come right back down. So VIX does that. Okay, so when VIX spike up, that's caused the pullback. That's what the pullbacks are for SPY. Boom. Okay, boom, pullback. So we want to watch the VIX as well. As long as VIX stays below the 50 and the 200-day moving average, we're okay. Now, if VIX gets below the 20-day moving average, then we're really okay if you are a bull. If you're a bear, you might not be okay. Okay? So definitely keep your eye on the SPY. Keep your eyes on the moving averages. We want to see it close above all the moving averages for another day. And if we get that second day where it closes it, I am highly confident that we will get back to this range from the 438 to 443 range. Okay, there's a lot of money up here, a lot of liquidity for market makers to grab and fake people out before heading back down. All right, that's SPY heading to the triple Q. Triple Q did something very similar. It bounced below the 20, got right back up to 20 the next day, but it's only one day, not enough, and then boom, closed above all our moving averages again. Now, if we check the 4-hour chart for the triple Q, we had a small area of imbalance. This red area right here, from that wick to that wick. No wicks to the left, no wicks to the right. Too many sell orders and imbalance. And what did the market do? The market came right back up and filled this area, this imbalance. So now we're balanced. Now we're ready to go back up. Have this, let me go back to the daily chart. Looks better there. Head back up here. So we also had this double top right here. Could possibly get a triple top, or market makers come and take this area of liquidity out. That's a lot of money for them to take. So like I said, bull market, I am bullish in this bull market. Filled the gap back above all the moving averages. Like with SPY, I want to see one more day back in the moving average. If not, if we fail to do that, we can come back down to fill this area of imbalance, which is around 346 to 344. All right, so right now I'm going to remain bullish. Like I said, guys, when you want to enter a trade, you gotta know when to enter, know when to exit. Identify your support and resistance level. Identify your areas of liquidity. Identify the levels that you think it's a good entry. Okay, I like to enter just under my moving averages. That's when I like to enter, because I think of areas of liquidity. So those are usually under the support or above the resistance. So I like to enter like the market makers. They hunt for people stop loss. So why not enter the same way as them, right? Instead of entering like my fellow retail traders, where there's a 95% failure rate, let me do it a different way. Okay, that's triple Q. Moving on to RK. I told you guys that I'm very bullish on RK. I actually alerted on my Discord on it's a buy. I have a 142 price target on it, and the reason is the big gap up here. Nice big gap, as you can see, which I highlighted with the red area. I believe that RK came out of a major correction. We had this ABC wave. Let me move the moving average because it's looking a little crazy. All right, now you can see it a little better. Got this ABC correction, ABC, which is a 5-3-5 correction. 5 wave down, 3 wave up, 5 wave down. Perfect. And now we got this move to the upside. This wave 1, wave 3, ABC wave down for wave 4. Now we're working on wave 5, where I believe we're gonna head to up here to fill this gap. Okay, it's looking good to me. I'm bullish on the RK. This is just strictly technicals. Now, however, RK is still trading below the 20-day moving average. Like I said many times, the 20-day moving average is like an equilibrium to me on the strength of a market, of the trend at least. So when it's under the 20-day, it's bearish strength building, okay? So I like to see tomorrow RK, if it can break above the 20-day moving average. 20-day moving is at 124.14. So tomorrow, or even the next day, if we see RK closing above 124, that it's a very bullish sign. Let me check the other moving average. Yeah. Yep. Okay, so RK is pretty much trading above all moving averages except for the 20. Okay, so the 20 is gonna be a decent resistance for us. We'll love to see RK break it. I believe we can. I believe on this 5th wave to the upside around 124. That's a very nice move, guys, whether you're a long-term investor or a trader. This is a good position. I alerted it yesterday, 110 to 117 range. We was able to catch this very nice move. So, but yeah, I'm still bullish on this. So any dip, I believe, is a buy. Okay, buy the dip. Bull market is here. So that's our indices. We got SPY, triple Q, and RK. I'm bullish on all of them, unless our scenario changes, right? I already gave scenario. Rewind the video, hear it one more time if you need to. Hear it as many times as you need to, okay? Very important information, strictly based on technical analysis on the charts. So let's move on to Bitcoin. And Bitcoin, I did say the other day, if you watch my video, that when I see this area, when Bitcoin doing something like this, right? You see how many times this pink line right here, that was our support, right? Critical support area that it tested 1, 2, 3 times, and then it finally broke down, right? Now, when that happens, that's a sign to me that market makers are setting up this area of liquidity, right? Yes, that's what I believe. So when I see that, I don't want to enter when at the support. I want to enter when the retail traders get stopped out. And look at that. Sure enough, came down and boom, stopped everyone out. But look where it came to. Got this big Shrek candle, this long wick, and it went all the way up to the 20-day moving average. That is a bearish rejection, guys. Bearish rejection. All right, I said it many times. I'm gonna say it again so you guys understand. As long as it's trading under the 20-day moving average, that is bearish strength building. Okay, so we need to see the Bitcoin break back above the 20-day moving average. Okay, we have this area of inbounds. Let me move this moving average. I think you guys understand the moving averages now. Okay, area of imbalance, and we have this area of liquidity that market makers set up. Okay, got the test here. Okay, we need another test. I want to see another test, possibly break up. Okay, take out everybody, and maybe it'll come back down. Okay, or it could just keep on going because we do have this big imbalance. This imbalance is even bigger. Okay, so trust me, guys, imbalance usually get filled. Now, if we take a look at Dogecoin, look at this. This is a 4-hour chart of Dogecoin. Had this big downtrend, had a bunch of touches. A lot of areas of liquidity here, which it did take out. Got this false breakout. They took out all the stop losses. And then after you got taken out, also attracted some breakout traders. And then you all got screwed, right? And then boom, it came back down. Hit our area of liquidity, right? Underneath the support. Boom, boom, boom. It came right there. Accumulated. Possible double bottom. Let me put the white arrows for y'all to see. All right. Possible double bottom, right? We came here, broke this critical resistant line, and came to fill this imbalance. Can y'all see that? Filled this imbalance right here, from that wick to that wick. Too many sell orders came, added some buy orders. That's good enough for me. This imbalance is null now. And as it came up, it created another imbalance. And look where Doge came right back to. Came right back to fill the imbalance. So now what I'm watching for is if this area right here, there's 18.5, even let's just say 18 cents. Will 18 cent hold? Okay, and if 18 cent breaks down, I want to see this area hold around 17.6 cents. Not $17, 0.176 cents, okay, or 18 cents. I want to see this area hold, and will we continue to go up? Okay, now we check the daily chart. I'm not seeing much. I'm not seeing any imbalance or anything like that, but I do believe this is the ST of phase B. We're still following wick off, but not really. It's not really following it, so we'll see what happens. All the moving averages, of course, we're trading below it. All right, so I'm not really seeing much for Doge, but if Doge can get back above 26 cents, into 27 and all that good stuff, you know, that will be a good sign that we're bullish again. All right, it kind of got above the 20-day today, got to 21 cents, but failed to hold it. Like I said, it filled the imbalance and came back to this imbalance. You'll see it better with the 4-hour. Came back to fill this imbalance. So this imbalance is null. We can just set it here. So we want to see what's going to happen from here. All right, we got the 50-day just under it. Will we get a bounce from the 50-day, or will we get a bounce from the 20-day? Maybe fake us, go a little below it to fake us out and head back up. We'll see what happens, okay? So yeah, identify all your support area, your resistant area, your areas of liquidity, your imbalances, and then figure out, okay, where do I think the market makers are going to enter? What do they want retail traders to do? That's the kind of mindset you have to have, okay? So, you know, Bitcoin, it did enter the area of liquidity that I like. You know, I actually did not pick up anymore, but you know, it's looking good. Will it get a rejection there? If it does break this area and hold, like it'll, you know, break out, retest, and head back up, I'll probably ride it up to 36K, 37K. And if Bitcoin's back above 37K, that looks really good, really bullish. Okay, maybe we'll get back up to the 41K. 41K was a very major strong resistance for Bitcoin as well. Okay, so as of right now, we are seeing some buying pressure coming in, but the 20-day moving average is still there, acting like a major ceiling. It's been acting like a strong ceiling for Bitcoin. So if we see Bitcoin actually closing above the 20-day moving average more than one day, because it's one day, came back down, one day, came back down. You know, we want to see it at least 2 days or more that's a really good sign. Other than that, if I see Bitcoin dropping below 28.7K, I'll be looking to accumulate around the 26K to 28K range under this ST right on ST level. See this white line right here? I'll be accumulating, guys, because that's an area of liquidity. All right, take out some people's stop loss. I'll enter there too. All right, Doge, same thing. Well, I did pick up some Doge, but I'm gonna be watching to see if these levels hold. Hopefully it does. Fingers crossed. All right, guys. So that's my technical analysis for today. Hope this was able to help. Keep you guys calm. Hope you guys were able to learn something and find some value in this, and continue to beat this market. And I will see you soon.